IRL to ERL is a very helpful and very well functioning concept that we use to identify our bias for the next candles. If you understand it well and can apply it, your trading will change positively. So stay tuned until the end of the video and subscribe to the channel, leave a like, leave a comment. We see you after the intro. So guys, I will introduce you to IRL to ERL, the concept for my bias, what I am using, what ISCT is using, but I will make a full explanation of it, okay? How to apply it in trading. So IRL stands for internal range liquidity, and it's a monthly, weekly, daily H4 or H1 FVG. ERL stands for external range liquidity, and this is a low resistance liquidity pool or equal highs, equal lows. So other things that we go through is time frame alignment, high probability FVGs, strength analysis, adding weekly profiles, and the draw on liquidity. So price does only two things. It draws to old highs or old lows or rebalance imbalances. Here can we see we have IRL and ERL. So IRL is a fair value gap and ERL is an external range liquidity, so a drawn liquidity. We anticipate a price movement like this. We position ourselves inside the red circle and we target 2 to 3 R, then that's enough. We don't need to target the full range to the external range liquidity. We can use to target 2 to 3 R inside that range because that's very high probability. So time frame alignment for swing trading, we use the monthly and the daily, weekly and the 4 hour. For intraday trading, the daily and 1 hour H4 and M15, and for scalping we are using the H1, M5 and M15 to M1. High probability FVGs, we need overlap PD arrays like swing highs, swing lows, mitigation blocks, breaker blocks, order blocks. We need to overlap with these PD arrays at a FVG. And another thing is we need premium and discount levels, so we want to see a bullish FVG below the 0.5 level and a bearish FVG above the 0.5 level, because we want to buy low and sell high, like buy in discount and sell in premium levels. Strength analysis is to check cross pairs. We buy the stronger asset, sell the weaker asset. For example, Euro GBP. Euro is weaker than pound, so Euro USD are better for sells and GBP USD are better for buys. And we can use additional SMT divergence, that stands for smart money is involved and is accumulated orders. We have lag in coloration and it will improve our win rate, but you will miss many trades because the price don't need always SMT to move. So I'm not using SMT for my trading. We're adding weekly profiles. Why? A weekly profile helps us to anticipate a high or low of the week. Trades are more accurate and improve our win rate drastically. This is a must-have for swing trading and additional for day trading. For scalping, we use the daily profile. So most high or lows of the weeks are Mondays, Tuesdays or Wednesdays. The Wednesday New York session we mostly have reversals, and Friday New York session we have a reversal too, it's called a TGIF. The drawn liquidity, how can we spot the right drawn liquidity? We look at the reference points where a high percentage of it is resting. This comes in terms of buys and sell stops. Buy stops are above old highs and sell stops are below old lows. Smart money buy sell stops and sell buy stops. Types of liquidity, we have failure swings, trend lines, bull and bear flags and imbalances. Market moves only from IRL to ERL and from ERL to IRL. Go over the low resistance liquidity because this is very important. Low resistance liquidity is another word for failure swings. It's often engineered liquidity and the consolidation stage of a market maker model on the left curve. We use it for a take profit level because price can easily run through these levels. Sometimes it is a trend line liquidity itself. For example, you can see here on the left low resistance liquidity that are failure swings. Why can I spot these easy? Because you see the wicks price can't close above the previous highs and created a very nice trendline liquidity. On the downside, you can see very high trendline liquidity levels. That's low resistance liquidity. So on the right, you see I entered this trade. I took this trade last week. It was GBP USD on, I think, Thursday. You see it easily smashed through all these low resistance levels on the left. So right now we are here on GU on the weekly chart. What can you see? So we have an internal range liquidity pool and external range liquidity pool. What can we also see? We have overlapping swing highs. That's a very influence to add to this bias. And you see we move from IRL to ERL. So the next example, we have gold on the 4-hour chart. What can we see on the left? We have a weekly external range liquidity pool. And here on the 4-hour internal range liquidity pool. Why are we using the 4-hour time frame? Because it's Timeframe Allignment and we are trading a weekly internal range to external range liquidity. So it is a 4-hour market maker buy model and we can position ourselves inside that 4-hour market maker buy model. Overlapping swing points, that's also very crucial for the 4-hour time frame, because this concept is fractal. You can use it in any time frame. But the higher you go with the time frame, the stronger are your internal range liquidity levels. And you can take a trade here. You can put a limit order on the 4-hour FVG, stops below the candle and targeting 2R. You see, price has easily smashed through the take profit, but we also can see that our stop loss placement is very important. And we need to place it under the candle that has created an internal range liquidity pool. We are on gold on the weekly time frame. What can you see? We have ERL and IRL. The price tags us into the internal range liquidity and we are wicking away. That shows us that price want to respect this level and we are continuing higher to take out the external range liquidity, what we did here. We are on Euro on the daily time frame. What can you see? We have internal range liquidity and external range liquidity. We are overlapping with a mitigation block and price has reached the mitigation block. So what can we anticipate? We anticipate a move higher to the external range liquidity. Hope you guys did like the video. Make sure you subscribed, take a comment, and we'll see you next video.